GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, Jim, good to be with you.
Well, what's caught your eye this week?
Well, there's been lots of enthusiasm. There came out with an employment number in the States that is positive, and I think it's credible. As you know, I'm sort of suspect about calculation of unemployment because they don't include all of those who have quit. But anyways, if you stay in one treatment of it, it's improving, as economists would say, nicely. And there's a lot of positive attitudes out there. There was a report I picked up here this morning from the guys at Zero Hedge is the flood of retail money into stocks. It shows no sign of relenting. 10th straight week going into ETFs and out of mutual funds. So, and that's the general public. And it's also, report was global. So it's a global phenomenon and enhanced in North America, I'd say, by the transition to the new administration, which appears to be the most pro-business administration in U.S. history. So that's all very exciting stuff. But now, when the market lifted off in early November on the election results, of course, that was similar to what happened in England in June with the Brexit announcement. First of all, sell-off, and then people find that it was potentially positive, so bought stock market. Sort of a wave of positive stuff came through the system, and then enhanced by Trump. So we've been calling it the rational exuberance. And rational because it was the change in the administration to pro-business. And so far, you can say that the attempts are being made to get more business, pro-business, and less government. Of course, it's being resisted by very powerful and entrenched forces in the political system, and particularly those who work for government. So, but at any rate, you are now up on the stock market with some technical figures that are quite high, and you've got sentiment numbers that are also very high. So a lot of the good news is in the market, and so the last week we changed the theme of the publication to just exuberance. We removed the rational part, and are staying with exuberance, which is measurably high. You've got technical figures that you find only at or near important highs in the stock market. So in the last couple of days, there was a correction. Technically, we were looking for a drop in momentum to kind of set up the correction, and then if the S&P got below the 12-day moving average, that would start the correction, which it has here. But then, as I said, this employment number is stoking the markets up to the positive side today. But actually, in a couple of trading days, a number of things like base metals index and crude oil came down and went slightly below their 50-day moving averages, which was we can call maybe step one in a developing trend change. The crude market is interesting because we wanted a number of weeks ago, we would like to see the move. We were looking for a rally for crude oil into March, and would like to see it end with a sharp jump. But there's been some distortions in the commitment of traders figures on their positions that were showing that it would have been a negative for the crude market. But hey, I don't care what it sort of went up towards March and then crack and down 5% the other day. So this has got our attention. And of course, for commodities, you have the problem that the U.S. dollar, on its latest correction, like a couple of months ago, it got up to 103.85, and that's on the DX, and was overbought and corrected down to a level at the 100. And then we were watching for it to build the base like it has at previous lows, and it did. It started to trade at that level, hold it. But the other one, what you wanted with that, would be the 20-week exponential moving average to base as well, which it was doing. So this then set it up. It looked like the base that was built in it was June 2014, and then the same thing against the 20-week EMA, and then it broke out, and it really rallied. So what we have here now was a correction from an overbought. It also fit into a model that we've been using for the dollar index, the correction has, and then now that this is stabilizing, and it's sort of around 102, and staying above the EMA, which is constructive. And if it sort of gets up into the 103s, I think it'll be away, and in which case it measures up to 110 or 112. So it'll be a good rally, as in 2014, which then set up and prompted the bear market in crude oil. It fell from the 105 level down to 26 in January a year ago. So and then crude came up to the 50s and is now smartly correcting. So now what can happen on these industrial commodities, which I should say the base metals also corrected, is that they have to do some technical work here. They've got below their 50-day moving average, which we noted as sort of step one for the change. And they're having a little bounce up here today. So the game between commodities and the U.S. dollar index are getting set up for an extended rise in the dollar and an extended decline in commodity prices. And the bullishness about commodities is quite something. I see them on TV talking about it, and when the commodity bulls get positive, it takes a lot of down before they start to get careful again. So, and did we have some questions?
Yes, we do, Bob, and we'll start answering them right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Bob Hoye. Bob, one of the questions we received from one of our listeners. Hi, Bob. It wouldn't appear as though the yield curve will invert prior to the next recession. Do you think yield curve inversion is relevant on this cycle?
Yeah, the yield curve plays its part by, it can on a lot of the time, the yield curve actually does invert where short rates get higher than long rates. And it's just the way it works, and we've got the yield curve in the U.S. back to something like 1857, and the main conclusion is that with many business booms, and the curve will invert, but you can also have a business expansion reach a maturity and then roll over and go into a recession without the curve inverting. It'll just change and go back to steepening. So we watch it closely, and it's sort of indeterminate right now. The other one, of course, with that is the credit spreads, the difference between high-grade and low-grade bonds. And wow, since, of course, the spreads widened as junk bonds got hit with crude oil crash down into last January. It was a terrific panic to get out of all this stuff. And then the recovery since, and the rally in low-grade bond prices and the narrowing of credit spread has been absolutely outstanding. But it seems to be maxing out here now, so this is something to watch for as well. So any change in the curve and a change to widening in the credit spreads would be a negative for the stock market, but it's an appropriate question.
And we'll have another question right after this break, along with Bob Hoye.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Bob Hoye. We have another listener question here. Bob says that in a post-bubble recession, gold mining stocks do well because gold does better than commodities. Since 2011, why has gold outperformed gold mining shares?
Yep, that's a good one. We go back to 2011, which was the end of the bull market for gold and gold shares. Fabulous market. We use the silver-gold ratio in that kind of a market because in a bull market for the precious metals, silver will always outperform gold, and that was the case then. But the trick on this one is that the momentum on the silver-gold ratio got up to over 90, and the only time it was there was in January of 1980, which was that fabulous blowout. And so we expected a cyclical correction, a cyclical bear market for the sector, and pointed out that it may not be as bad as the one that followed 1980, but I'll tell you, any bear market for the precious metal sector when you're in it is as bad as it ever gets. So both the bullion price and the stock prices came down, and the gold stocks did underperform the bullion price, and that went on right on till December last year, like a year ago, December 15. And then the process started to bottom, whereby the gold shares relative to the bullion price stabilized and then moved up, and then that prompted the big rally. And so again, that became a way overdone. The silver-gold ratio got way up there, and that was May a year ago, or June. No, it was July. That's right, it was July, when we called for a significant correction in the sector, and then that came down here till, again, at December, when then the gold shares began to outperform the bullion price, which was positive for the market, and we had the nice rally there. And then I think it was the 9th of February we published that the gold shares were no longer outperforming the metal price, and said that it made us nervous, and we called for a correction in the sector, which we're getting, and it's not yet quite bottoming, but we're watching for a bottom in the precious metals. But the question was a good one, but it had a misconception about what had been happening to gold and gold shares since 2011. It was just the bear market from hell for both.
Bob, we also have an in-studio guest who has a question. They wonder why, when the price of oil goes down in Canada, we pay more for our gasoline.
It's an evil plot. Canada, I don't think, has the huge refining capacity on a relative sense that the United States has. And also Canada may have a higher tax collection on gasoline prices than the U.S. has. But if it's any comfort, gasoline has a shelf life. And whenever the economy slows down, and the growth rates out here are tremendous, but the next slowdown in the economy and catch up of refining capacity in Canada should produce a decline in the price. And if you take a look at in the States, the gasoline future has been coming down over the last number of weeks. So the market forces can eventually prevail, and you and I would all like to buy gasoline at a lower price.
And also, Bob, we have to wait for the annual springtime fire explosion at some refinery. As an excuse to boost prices.
They got that the Dakota Access pipeline finally approved, and last week, I think Tuesday, there was a final desperate attempt by the activists to prevent its expansion, the completion, and the judge said no way. So, but the interesting thing about it is that link on the pipeline will be completed, and they expect oils to start flowing next week. And of course, the issue was used by the activists was that there was a small lake there. Maybe some might call it a pond, but how they're getting the construction through there of the pipeline is really quite simple. They bore a tunnel under the lake and then feed the pipeline through, so it doesn't even disturb the lake or the bottom or anything else. So I understand that there was some 10,000 protesters there, and the garbage and mess that they've left behind is a greater threat to the environment than the pipeline. So life is always entertaining, isn't it?
Well, without it, it would be boring.
Yep.
Bob, thank you so much for chatting with us.
Yep, Jim, good to be with you, and we look forward to next week.
Have a great weekend.
You too.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can forward questions to Bob or anybody else here at our extensive staff to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.